There is a value above time and crisis, passed down from generation to generation, never rusting. A shield that protects us even in economic storms. Yes, it's gold. So what are the secrets of this legendary value? How to make the right gold investment? Join me to find out together. Gold investment fundamentals. Who hasn't seen gold shine? Why is this precious metal, which has fascinated royals, empires, and even ordinary people throughout history, so attractive to investors? Let's dive into the basics of gold investing together. For thousands of years, gold has been recognized as a store of value, a currency, and a symbol of wealth. It is seen as a hedge against inflation, an investment that is independent of fluctuating exchange rates, and a reassurance in times of general economic uncertainty. So why do gold prices fluctuate? Gold prices are influenced by many factors, ranging from global economic conditions, central banks' gold reserve policies, mining costs, and geopolitical events. Among the factors that lead to increased demand for gold are economic uncertainties around the world, technological advances that facilitate the physical buying and selling of gold, and investors' desire to spread risk. As for the advantages of gold investment, it is highly liquid, meaning it can be easily converted into cash. It is an excellent tool for portfolio diversification because it generally moves in the opposite direction to other asset classes. However, as with any investment, there are risks associated with gold. Gold prices can be volatile, the value of the investment can fall, and there are costs associated with storing physical gold. All in all, gold investment can offer excellent opportunities with an informed strategy and the right information. So, is gold the right investment for you? Keep watching the rest of our video to find out. 2. Gold investment methods. Many people who want to invest in gold think that the best way is to just buy physical gold. But there are actually many ways to invest in gold. For many people, the first method that comes to mind is physical gold, bullion, coins, or jewelry. It is a real, tangible asset that you can hold directly in your hand, unaffected by inflation and exchange rates. This method also comes with risks such as storage and insurance costs. Oh, and let's not forget the risk of theft. If you don't want to hold gold in physical form, consider investing in gold mining companies. This is an indirect way of investing in gold. However, you are not only exposed to movements in gold prices, but also to the company's own operational risks. Another popular way is through gold ETFs. These are exchange-traded funds and essentially track the price movements of physical gold. This way, you can benefit from gold price movements without having to store physical gold. Gold bonds are also an interesting option. These bonds are usually issued by governments or private organizations and earn interest based on gold prices. It can be a good way to get a fixed return without custody costs. But of course, there are risks such as bankruptcy or non-payment. Finally, let's talk about digital gold. You can buy and store it electronically. It's easy to buy and sell, but you need to be aware of digital security risks. In conclusion, there are many ways to invest in gold, each with its own advantages and risks. It really depends on your financial goals and how much risk you are willing to take. How do you feel about investing in gold? Which method appeals to you the most? Now it's time to discover the best investment method for you. 3. Gold investment strategies. When it comes to investing in gold, we all have different goals, risk tolerances, and investment time horizons. In fact, the strategy of my friend Charlie, who is planning a short-term investment, may be very different from the strategy of Jane, who is thinking long-term. If you are thinking short-term, perhaps you want to take advantage of intraday or weekly movements in gold prices. The important thing here is to follow market movements closely and make quick decisions. But remember, short-term investments carry high risk, especially in volatile markets. For those like Charlie who like to move fast, this can be tempting, but it also requires caution. If you are thinking long-term, you can rely on gold's historical ability to store value, as Jane did, as a hedge against the effects of economic uncertainty or inflation. Over the long term, gold tends to have a stable value. However, this doesn't mean that there won't be sudden drops. With long-term strategies, it is critical to be patient and hold on to your investment without panicking. Ultimately, which strategy you choose to invest in gold depends entirely on your goals, your risk tolerance, and your investment time horizon. The important thing is to act consciously and follow the markets closely while determining your strategy. And, of course, never make emotional decisions when investing. So which investor type are you closer to, Charlie or Jane? 4. Common mistakes in gold, investing and how to avoid them. There are some pitfalls for beginners in gold investing, and unfortunately, many people make these mistakes. As the saying goes, the best mistake is to learn from someone else's mistakes. That's exactly why I want to talk about this topic. First, many new investors start trading without having enough knowledge about the market. Investments made without a good understanding of how gold prices move and which factors are influential are risky. To avoid this mistake, you should first try to understand the gold market well. Second, emotional decisions. Sometimes you can get caught up in the sudden movements in gold prices and panic sell, or vice versa, rush to buy more when it is rising rapidly. But emotional decisions are usually wrong. To succeed in gold investing, you need to be patient and cool-headed. Another common mistake is to invest exclusively in gold. Diversification, or diversifying your investments, is the key to reducing your risk. So, what are the characteristics of a successful gold investor? First of all, you should be knowledgeable and open to continuous learning. You should be patient, disciplined, and planned, and avoid making sudden and emotional decisions. And most importantly, you should be able to manage your risk while investing. In conclusion, heed these suggestions to avoid common mistakes and succeed in gold investing. And remember, every investor makes mistakes from time to time, but the important thing is to learn from them and become a more informed investor. Which suggestion did you find most useful? E5. Conclusion. And that's the end of a comprehensive journey on gold investing. Throughout this video, we've covered how gold has been a valuable investment throughout history, different investment methods, strategies, and common mistakes. I hope this information has been instructive and will help you on your investment journey. If you liked this video and you think it was useful to you, please click the like button. And of course, I look forward to your comments and suggestions. If you haven't already subscribed to my channel, please don't forget to subscribe so you don't miss any of my future videos. What topic would you like me to cover in my next video? Please give me your suggestions in the comments section. Maybe in our next video, we will focus on a different investment instrument instead of gold. Who knows? Thank you, everyone. Stay safe and good luck with your investments.